welcome, folks. This is David White sitting in for the one and only Tom O'Brien for the first hour. We'll have Steve Rhodes in here for the second. We are looking at the S&P at 1903 right now, up 16.5 points on the S&P cash. We've got some fairly decent volume out here, but certainly 2 weeks ago we probably would have said this volume was great. But today, a little lackluster compared to the huge volumes we were having from, Tuesday on. I look at, if you listen to Tom O'Brien regularly, he will be talking about the floor-traded volume at the New York Stock Exchange tape. I use something called the New York Stock Exchange Consolidated Tape. It's both the American Exchange and all shares traded, whether they're traded at the New York Stock Exchange 2, and that includes all shares traded on ECNs, maybe off the board. Right now we've got about 2.36 billion. We were mostly hitting $3.5 billion last week at this time. So a little bit coming off the bloom coming off the rose for volume again and coming back to somewhat narrow levels. If you've listened to my show, which precedes the Tom O'Brien show at 2 to 3 each day, you will be able to listen to my show from today. But basically, I was saying this last Friday, so it's not new. But what I'm looking for is this market to come back up. You get these wicked down moves in, even if this is a bear market, which is not confirmed yet. You get a wicked down move. Every bear and his dog is out shorting the markets. Normally, the pattern is to push down early in the morning, and that is the weak hand shorts and retail traders who have not been through many of these patterns before. By the end of the day, they're covering. And this happens so many times that I've pretty much learned to stay away from short covering rallies if I think that the broader market or long-term move is down. I may catch something like I did last week, which was, of course, a violent retracement of a bear move. But at the same time, you want to get out of that and get out of that party fairly quick. You don't want to be hanging around fairly long if you are playing counter moves against a fairly... it'd be tough for anybody to say that they weren't probably a little less bullish after last week. So anyway, printing out here at 1903, I was thinking that the market could pull back up to 1925, 1935, maybe as high as 1945. We'll see over the next few days or so. But there is another phenomenon going on, and that is known as options rollover. The monthly options expired while weekly options are becoming more and more prevalent. There's still a huge monster amount of options that expire monthlies. You won't find many of the people on Wall Street using weekly options except in rare cases of earnings. And for that point, that you want to be looking at just what can you glean from the next 2 days, and normally it's nothing. When you hedge your position as an option market maker, let's say that you've got a put, you're going to buy the equity on the other side of it and zero your position until the option expires. That means that you have to come back in today and sell it. If you were basically selling calls, that means that you need to be short the other side of that, so you're shorting the equity. So what you get on a day like today is a lot of fighting, and I'll call it chop. And that chop in the market actually will tend to get out of the market probably by about Tuesday, usually early afternoon. It may take all the way till the close of tomorrow. So I don't really spend a lot of time putting in market action that happened on expiration day and the 2 days that follow, where these options are rolling over. Of course, now we're into October, which means that you're going to have options that are being put out at 60 and 90 days that will take us almost through the end of the year. And we're going to get a good idea, at least what the option market makers think that this market can do, and I'll be looking at those. Like I said, I don't like to have a lot of positions on that Monday and Tuesday after expiration. I like to see where the market is really moving on Wednesday. I had some really big trades last week. We're going to celebrate a little bit here at TFNN. You can go to the front page and check out my daily newsletter, The Path of Least Resistance. We're giving you a special deal where if you want, you can get 30 days for $30, 30 for 30. And if you are a subscriber to my newsletter already, we're offering the lowest level and price ever to re-up and continue subscribing. So go to the front page of TFNN and you will see it in the banners right there and take a look at it. Anyway, bouncing a little bit, we probably spent the last hour at 1899, and now we're up a few more points. Again, I'm going to say that it's not going to be uncommon to see this pattern over the next few days, and that is people that now believe that the market's headed down are not going to get and give a chance for this market to pop back up very far. And I think you can probably see that over the next few days. Sour opens and not so sour closes, and we're kind of going to tick or stumble back up to a level, and at that point we're going to decide whether this market's headed higher and we had a false breakdown, and or whether it's time to pull the cord again and get a parachute because it's going to be a long drop. But we'll probably find out, I imagine, late this week. Good time to check out my newsletter. On this day in 1803, the U.S. Senate ratifies the Louisiana Purchase Treaty, under which the U.S. pays France less than 3 cents an acre for 828,000 square miles of territory stretching from the Mississippi River to the Rockies and from the Gulf of Mexico to the Canadian border. Probably the best 3 cents an acre ever spent, I would imagine. But on this day in history. We're going to get into some of the charts moving out here. Of course, after the bell, we have Apple. And the big story on that, of course, is that they picked today, their earnings day, to also start rolling out Apple Pay. Not a lot of volume before this. My guess is that even if the numbers are not good, they're going to be good from the new CEO, who's under a lot of pressure to perform. There's a lot of things that you can do to move earnings up. So I'm not expecting the earnings to be bad. I suspect that they're not going to be as good and wild as most people thought. I'm looking for this stock probably to pop probably around 101 to 101.70, unless there's something that we haven't heard about that's in those stocks already. What do we have? Oh, I just wanted to look at the current price on Apple, $99.62. If it should go over 101.70 on the gap up after earnings, I would really be watching it over the next few days, because that is the battle line for Apple. And right now, 48 million shares as we speak. Of course, the disappointment du jour today is IBM. If you've been listening to Tom O'Brien's show and we all knew this was a huge financial engineering. The only question was when the merry-go-round would stop, when the music in the musical chairs would be turned off, and a lot of people would be sitting or standing hoping to find chairs. That day came for IBM today. They've been financially engineering this company for 2 years with share buybacks, with bogus upgrades. And when you read Tom's book or any book on investing, normally you'll read the normal cycle, which is the markup cycle, the distribution cycle, and, of course, the crash cycle when everybody is left to pick up the pieces. What we've seen in IBM is just that. It's been in a wild trading range from about $200 to 180 for a long time. Every time you thought things couldn't get worse, they did. IBM would buy back more of their shares, making their EPS look better. To the casual observer, they would not see the tree that was rotting from within. We will be back after this break.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. Now, we were left off, and you can give me a call at 877-927-6648 if you would like and ask me a question. But certainly when we look at IBM, if I was channeling Tom O'Brien right now, I would tell you two things. One, on a longer-term chart, we see a massive ABC that is set up in this. We've broken the B point with it now. That ABC would take you to 155.50. And if we look and see what's out there, your 155, it's right at the bottom of this gap. Actually, there's two gaps. Let's zoom in on this if you're watching on Tiger TV. There was a little gap up back in 2011, and it looks like in, what is that, September of 2011. And actually, there's even a smaller gap up that happened in 2011 in March, the week of March 25th on a weekly chart. So when we look at these, that's at about 157, 156. You've got gaps. You've got a Fibonacci expansion that takes you to 155.50 and a gap there. I would imagine you're probably going to see that IBM goes there fairly quickly. If it expands, your 1 to 382 expansion takes you to 138. The 1 to 1.5 takes you to 122, and the 1 to 618, if it's a total blowout, takes you to 128. So you've got some pretty big moves out here that could happen in IBM. I think if you basically there was one thing in it that scared the bejesus out of everybody, and that is that the CEO said that the business is moving at a pace that no one has ever seen before. And I take it that means that it's headed down. They haven't been extremely active in putting in new businesses. And, of course, instead of putting their money to work, they've been buying shares back on it. I've got a question in the den. If IBM stock prices keep dropping, will they have to take a big charge to EPS and balance the equity sheet from crappy stock buybacks? She said they were going to quit this morning. And I think that's another thing that really hit this stock hard is that I think her name's Ramadi, and she said that they would not be buying shares back. And why she didn't say it, I suspect that the dividend is also in question. Now, they do have some very, very neat technology coming in the future. And that technology is based on Watson. If you watched, remember when Watson, the Watson system won on Jeopardy, it has the ability to make a huge, huge amount of money. Unfortunately, they are just getting started now and getting partners now. Look for more and more people. They basically have over 500,000 employees. Look for probably 25% of those to exit over the next year. So they're going to continue to do it. And I think the stock's going to probably trade rather wildly for a while now that it's out of these zones. But I'm thinking we probably get down to 155, and that would be the level. Yeah, artificial intelligence, a pretty good business out there. I wrote fairly extensively in another area of computerdom for on Friday's Tech Insider about another. But they needed to get that thing out and making money a little sooner. They did not, and that is what's become problematic. But I think in a couple of years, this is probably going to be a good company to be in again. Right now, though, the next probably year and a half is going to be incredibly difficult for IBM. Had another question in the den, and that is why are a lot of these retailers, and the question here is why is Verizon and other carriers allowing free iPhone 6 trade-ins for older phones? And the answer is mostly T-Mobile. If you've listened to my shows and Tech Insider shows on T-Mobile, they basically are trying to be such a huge pain in the rear end that they are going to get bought out. And in the meantime, them dropping the prices has caused a lot of pain. I think you're going to see these, especially the carriers, really come down. In fact, I was talking to a friend of mine who has 3 kids. Yeah, he's got 3 kids. And his bill was running somewhere around almost $300 a month for all the kids and the data. He was able to switch to Sprint last week and bring that down to like $120 or something. So a lot of the ripple effects are starting to happen. And I guess the follow-on question was, is this going to hurt Apple? Well, for the meantime, no, but we've got to look and see what they say on the earnings call tonight. If they start saying that that basically carriers are not going to pay them $700 for the iPhone anymore, it's going to become a lot more problematic for Apple. They basically have about 65% margins. The only people that ever get any better margins than Apple is Intel at 68 for their chips. In fact, their top-end chips can get 200 or 300% margins. But even just the regular chips out there overall are printing somewhere around 65 to 68, but just a tick higher than what Apple gets. Now, the question is what and if and when T-Mobile puts enough pressures on the carriers to start hurting Apple and having Apple either raise the price for iPhones and or see the margins move down from Apple. And I don't think that's going to happen before Christmas. If I was Apple, I wouldn't bend down before then, but probably after Christmas. That's why I think Apple has some significant long-term problem. And I don't think it's Verizon versus Apple. I think it's more T-Mobile versus Apple. T-Mobile dropping their prices puts pressures on the rest of the carriers, and that puts pressure on Apple. So it is a little bit of domino effect in that particular one. You can certainly give me a call at 877-927-6648. I look forward to all of your phone calls. I don't see anything up here now. Oh, there it is. So we will, let me move something around, and then we're going to get to some other stocks. Of course, after the bell, we have some others. CMG is going to be that. I can't see that there was a lot to change in CMG. What I dislike, of course, was that they ran this stock into the huge pullback. That normally means there were a lot of shorts, and they were able to prop the stock up probably a little higher than support would be. If I was a betting man, and I am not, I like to go for the sure thing, at least if I can find it. At least the odds are in my favor, and I don't think that they are for a play of Chipotle after the earnings tonight. But I could suspect that any upside is probably somewhat muted on Chipotle. The downside would probably be in this huge up candle bar on the weekly of 725. In fact, let's do something here, which is go back to a 1 year and a daily so we can see that just a little bit better. In fact, absolutely, this machine decided to do crack. We'll be back in a second. We'll look at it again. But CMG after the bell tonight, Apple after the bell tonight, Illumina, which we'll look at also when we come back after the bell tonight.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And welcome back, folks. We were looking at, was it Lumina, IBM, CMG? Oh, that's what it was. It was CMG. And we'll take another look at it here. On a daily, we were looking at it on a weekly. Not a bad-looking chart out here, exactly what you would like. If this thing had gotten back to about 610, 615, you could have thought about buying it. It did exactly what you would want in a standard James Wyckoff style, i.e., it broke out and had a sign of strength. That happened on, what is that, July 22nd. It popped up with a 2.2 million shares, and it's come back in here in the last few days, 481,000, 534,000, 600,000. So pretty light, and it hasn't really filled a great deal of that, so the risk reward's probably not good. But at 615 with this kind of light volume, not bad. Now, maybe we get a bad earnings report, but your risk to the downside is probably this gap. I don't think that there's much to the upside, maybe 665. So I'm not looking for a lot of movement from it, and neither are the options. Yeah, maybe it pops one more time, but hard to see. Other stocks of interest out here is Illumina, the big DNA sequencing company, MNILMN, if I can type it correctly. We will look. This is another one that's been in a big trading range up here, and this one could give you a surprise. DNA sequencing has certainly come to the forefront, but certainly a hard one to catch out here. This one had an incredible run off the bottom from last week. Let's zoom into that and take a look just a little closer. I would have liked to seen a little bit better volume, but a low of 145.12 on the 15th, and you've had a nice move into Friday's close up at 167. So, you know, what, $22 in 3 days? Not a bad deal. Now, you could make a case for this being an ABC down. Let's take a look at it. In which case, you'd have a projection on earnings at, well, let's get this a little bit better here. You'd have a projection of, what, 130.50. So let's see what that would take us to. Well, pretty much this giant gap down here, if they severely disappoint or say something horrible, comes right around that 130, and there's a huge gap there. That's where your support would be on a blowout to the downside, as we've seen in stocks like Netflix last week, where it's not uncommon. I wouldn't say it's probable, and most likely you're probably, when I looked at options on this earlier today, you're probably looking at a $15 range up and down on it. Yeah, going to be nice. Anyway, let's take a look at a few other stocks out here. In the meantime, you can always give me a call at 877-927-6648. And I had a few stocks out here that I thought were fairly interesting that I wanted to take a look at today. One is the Campbell Soup Company. This one's bounced off its last little low, but again, even these safety stocks have had some decent volume. Nice little bounce out of here today, but not a lot of volume, so we've got to be watching that. Cimarex, or Chimerex, out here. This one's kind of interesting to me, too. One of the few out here that did try to bust out its previous high. Not a lot of volume in the stock, but certainly made a very good indication on Friday that this thing had hit a high. When you look at the October 8th high, basically 13 million shares, it spiked up. Tried to go through it last Thursday, and on Friday tried with 4.4 million shares and plop today right back into the trading zone. Another stock that of interest out here. Now, this one's more of some of these biotechs that may be setting up for a buy. In this case, this thing's been skimming along the, let's call it mid $5 range, $5.50, $5.60. This thing came down to make a huge volume low back from, let's size this a little bit better. Come on. There we go. What size is it? There we go. The November 14th of 2013 low at $5.61 had 10 million shares. That's where you really had a lot of volume. You came back in and tried to get to the low, but didn't on May 9th, so you know you're going to get another swing at it. Got to $5.93. We finally got to it. We've gone below that by 2 cents so far, and you just needed less than probably about 8 million shares. This is and does look rather interesting down here at 1.8 million shares for the day. So keep an eye on it. BioScript, B-I-O-S. Thought it was BIOS when it first came out. Cray Research, another one of these companies that looked fairly good out here on Friday and Thursday and Friday. I was actually looking at this one, and would have been a nice little run on it, certainly, if you bought some white lightning calls on it in the last few days. But not a bad setup. This thing had been on a run. Cray, of course, one of the early pioneers of supercomputers, he didn't cotton much to personal computers. I still don't think that they do much in that realm. But certainly this one had some high volume lows back in May 9th of this year, $24.63, 900,000 shares. Tried to get into it, but did not break it. It was about 30 cents high on August 4th with about half the volume. You actually did get into it. You broke that low and closed back above it. So you had a solid buy pattern on Cray, C-R-A-Y. And I certainly love their original computers. And if you actually, there's a hotel down here by the beach made, pretty much built right about 1986 when the Crays were really the big deal. And Cray actually built a computer that looked more like a bench seat than anything else, and they actually duplicated it in that hotel. And I was able to guess within about a year when that hotel was built by the way that they had the Cray benches in the hotel. But it looked more like a chair than anything else, kind of a futuristic chair anyway, from like a 1960s or 70s sci-fi film. But still making supercomputers and still making big bucks out here, even after old man Cray passed away. Orchid Apple Capital. And I'm going to pass on that one. I don't see a lot there. Santier Consumer USA, SC, another one of these that might be trying to find a bottom out here, even with the horrifically bad week we had last week in the general markets. This one had been testing the August 14th lows at $17.35 with 3.3 million shares. Basically, when we got into that over the last week, 3.1 million shares as it actually pierced it, 2.3 million shares, 2.3 million shares last couple of days. As we look out here, not too bad. A little bit of room out here. But another one to keep an eye on. Now, one that won't make many traders out here happy is natural gas. This one ticked down once again today as we look at it through the prism of the UNG. This is certainly down. I don't know if you can get it at a better price and still want to buy it. This certainly is down into the gap up. That gap happened on the 13th of January of this year. That gap, on huge volume of almost 10 million shares. We're back in and testing that gap, and actually the low part of that gap. You wanted to see some fairly light volume. We've got 8 million shares. What you really need to see is this thing basically stay lower than 8 million shares, and I think that's going to be a tough order with us. Well, we've got 15 minutes left in the trading day. And that is it. I don't know. I think you've got a failure here. So you're going to have to look at natural gas. Probably a buy play of what's going on, of course, in the crude market. Maybe throwing out the bad baby with the good baby. And I would be watching this. And maybe it's just going to pop down here and then pop back into the trading range soon. But certainly since it hit its high of $27.89 on February 24th, it's been in a downtrend. I think it's going to take some real cold weather to really turn this around, but it is going to be rather tough. Any Ebola plays, positive or negative? I don't have any. One thing I do think, though, is they need to add a new symptom to Ebola. Everybody knows that you cough. Everybody knows that you sneeze. Everybody knows that you have a temperature. But one more. Apparently, it is the need to get on an airplane, because everybody that's got Ebola has to get on an airplane, has to get on a cruise ship, has to get on something and go spread it around. It's got to be one of these things where it's got to be a symptom. Nobody has just sat at home and had Ebola yet, at least in the States. We'll be back in a minute.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien. And this is Dave White sitting in for the one and only Tom O'Brien. And I'm going to be here in the next hour. We're going to be talking earnings and doing a few interviews with the people that normally call in on Monday, Amy Smith, and, of course, our friends from Thinkorswim. So it'll be an exciting hour. Of course, Apple, CMG, Illumina, all those companies also coming out with earnings. So I'm sure it will be action-packed as we go through that particular hour. Now, as we look at the market out here, I wanted to check back in for what we're doing. Pretty much since the top of the hour, 1903 seems to be about it. 1686 is what we're up on the S&P cash overall, about 0.9 of a point, with 2.9 billion shares as we go through it. And as I said, doing about 3.5 billion shares to 4.5 billion shares last week. Looks like we're probably going to be on the low end of that scale with 8 minutes to go. So keep an eye on that. Anyway, we were looking at UNG, and the question is going to be very tough over the next few days. You really wanted this thing to come in with lighter volume, that maybe this gap right here that we were looking at before the break was it. Now, what would happen if this gap does not hold? The next logical place for you to look would be right under $18 on UNG, and possibly down to this low that's been untested, the November 4th low of 2013. $16.91, 6.5 million shares. So not a huge volume low out here that normally has to get tested. And if we look just even a little bit farther behind on this, you know, you've got some pretty darn good support. But my guess is you're really going to have something happen out here in the way of disruption, either heavy snowfalls early, maybe some disruption in the Gulf. We only have a few, probably about 45 days left in the hurricane season. Is that right? Maybe 50 days? Something like that in hurricane season. And it is so extremely rare to have a hurricane after that period that it would be almost like getting hit by lightning. But what we do want to see is, you know, and what the volume is like in the next couple of days, especially in natural gas. And I imagine tomorrow our friend that comes up at 5 o'clock, our one and only Andy Heck, will be talking a lot about natural gas. And maybe it's just throwing the good baby out with the bad baby, but it seems like there's not a lot of support for natural gas right now. We have a couple more stocks that I want to look at here. And this one's starting to look not too bad. Unfortunately, you really have to look and see whether or not in the next down leg we're going to continue on. Zone Technologies, ZHN, ZHNE is the symbol for that. Certainly this one was able to test, with all the pressure we've had lately, basically a higher volume low. May 8th out here at $2.08 with 900,000 shares. Last few days, well, at least the day that we had last week, the low came in with just 280,000 shares. So it is probably problematic to look at all the stocks out here and say that the entire market's going to come back down. We certainly have some of these stocks that would have it. And a fairly recent addition to at least the stocks that I watch at is Zoe's Kitchen, Z-O-E-S. I've never been in one, but it certainly looks that it is an issue up here at these highs. It's got higher volume. It did not hold that high out here, but what we're looking at in Zoe's Kitchen, which I guess is, from what I've read, is Mediterranean cuisine. You're looking at the June 26 high at $35.59 that had basically 300,000 shares, and you spiked through it with 440 today. So there are a few out here that are bucking the trend of lower prices like we've seen in IBM. I wanted to take a look at some other stocks real quickly, see if we can, I wanted to go back in and see, I want to take a quick look at Amazon while we've got a chance. Amazon actually getting pretty much smoked over the weekend by several people. I think Paul Krugman was one, saying that they're abusing their position as a monopoly. I don't think it had a lot of effect yet, but certainly the pop down to the $293 low with 4.7 million shares still wasn't able to beat the high volume low of August 1st that had 7.4 million shares. So it closed back above 304.59. Certainly could do a lot for Amazon in the bull case out here. I think they're a great company. It certainly looks, though, that maybe like IBM, a lot of these high flyers that weren't making cash, that had been doing a lot with share buybacks and basically engineering their balance sheet, are starting to see the kind of weakness out here that you would think that these companies could get. Now, this had a nice run up and a nice run down. The energy really didn't really expand out here, so I think we could still see this thing in a trading range a little bit higher. And if I was going to pull the trigger on this thing, I'd probably want to get something like a 50% retracement of the last move down. And that would take us to pretty much about 322 to about 327. So a few of these stocks I'm hoping will bounce so that I can get another bite at the apple, pun intended. And I'm going to need a bounce to get the risk-reward correct on these. I certainly would like to buy puts on them, and I need the VIX to come down. So that's it. Zoe's Kitchen. Maybe you missed it. I think that's what I was talking about. Anyway, we'll be back in the next hour. We're looking forward to Apple's earnings, Chipotle's earnings, and Illumina's earnings. And then, that's kind of a light night. We're going to get into some just earnings over the next week that are just going to be probably 5 or 10 big companies a day. And we've seen what happened with IBM. Market was still able to rally as we come into the close, 1903.87 on the S&P cash. We'll be back with you in the next hour. Feel free to give me a call in the first segment if you'd like at 877-927-6648. Sitting in for the one and only Tom O'Brien today, and he will return tomorrow. In the meantime, we're going to try to have as much fun as possible. We've got a ton of earnings coming out. We've got the IBD folks and the people from Thinkorswim this hour, so it is going to be a action-packed slam-bam extravaganza. Now, what we see in the market today is the S&P closed at 1904, up 17 points on the S&P cash, 3.3 billion shares on the New York Consolidated Tape. If you listen to the show often, you'll hear Tom O'Brien talk about the NYSE floor traded volume. You can use them interchangeably as long as you know which one is which. The NYSE consolidated volume includes volume from the Amex and all shares of stocks that are traded anywhere, whether on an ECN or that. But as long as you continue to use apples to apples, they work. What that does tell us is that volume has started to come off a little bit today. We were having 4 and 4.5 billion share days last week, and 3.3 starting to pull back just a little as we move back up after having significant volume to the downside. And when we look at the NASDAQ, it was up 57 points. So, interesting day. Of course, the Dow, which I don't spend a lot of time looking at up 19 points. I think more issues with the Dow, especially with some of the stocks and IBM in that list being problematic. If you are just getting out of your cars today or just coming out of your office job, of course, IBM was smacked around like the proverbial red-headed stepchild. The itty-bitty mines company said that they were facing incredible headwinds in their company, and this stock just blew it out. And that's going to be rather tough. Let's see what they actually closed at here and what the actual volume was. Okay, they closed down $12.95, 169.10. If you look at this as an ABC or longer ABC, you can certainly make the case that this is headed long-term back down to what? Well, let's pull up a chart here and take a look at it. 3 years on the weekly, and the expansions sets us up to with what? Yeah, 1250. Pretty much sets you up with a projection of 155.50. So there is also a gap at that 155.50 if we look back a little farther. So my guess right now, we've broken the B point of any longer-term ABC down, although it's probably a little bit more complex of an ABC that most people get. But the extension on this would take us to 155. There's a gap there. Not much of a volume, so you may even have a little bit more downside. But certainly you have the B point broken with higher volume today than you normally do. Other things going on, of course, after the bell, we had CMG come out and report, and we'll get the certain number here. Was slightly higher for a little while. It's now down about $12. If you listened to me in the previous hour, we were looking at the options. Didn't say that didn't look like there was going to be much range in the way of Chipotle today. I suspect that they spent almost all of the effort last week keeping this stock higher during the weakness in the general market. And that, if hopefully we don't have a lockup on this computer. I think I do, actually. So let's start it again. Hang on just a second, folks. There we go. We'll pull it back up. Okay, CMG 2 years daily. Good. CMG. Okay, we have this little gap. That gap happened on the, what is that, July 22nd. This thing gapped up with pretty good volume, 2.2 million shares. Last 4 or 5 days out here, this thing's been pretty much going in the range of about 600,000 or 700,000. So not a bad looking chart out here. I was also saying in the previous hour, I would like to see this thing, if you were thinking about buying it, to come back to probably something like 610, 615, and close up a little bit more of that gap. I think you might be getting this with after hours being at 640. As long as volume is light, the bullish case for Chipotle could still be out here. One more test of that top at about $700 on light volume. In fact, that high didn't actually come on big volume, so it's going to be kind of tough to get light volume when you get back up to that August 21st high in Chipotle at 697. But it is what it is. So we will take a look at it. Other stocks of interest here after the bell is Apple. Apple's earnings will be coming out at the bottom of the hour. That is, at 4:30. Eastern time, and we'll take a look at that. I'm not expecting a lot of movement in Apple either. I think a lot of it has already been used. It had a decent day today. Let's see where it closed. $99.76. I said earlier in my show today, I'm looking for this to close probably somewhere around that 101.70, which has been fairly tough resistance on Apple. And we were also talking a little bit in the previous hour, if you missed it, that there's a lot of pressure on the carriers. And the question is, when does that pressure on the carriers push through to Apple? When does someone finally say, hey, I can't pay you $700 for that phone anymore. I'm going to pay you $650. And, of course, the margins on the Apple iPhones are really what drives this stock. And what would it do? I think, you've got a high out here at 103.74. The one that I'm really looking at is 101.75. A close back above that would be very interesting tomorrow. But you've got to break through this September 2nd high to really mean anything at 103.74. Do I think it can do it? Yeah, I think it can. I think that there are enough people to get behind a single stock on Wall Street and push it higher. It's 12% of the NASDAQ. They can push the NASDAQ higher by buying a single stock. In the meantime, they can start distributing those stocks between now and the end of the year. My thought is that Apple next year is when they're going to have their big problems after the push is over, after people buying these phones for the kids. Into Christmas is over. Next year is the year where they're going to have to guard margins. And, of course, at 65% margins to 68% margins on the iPhone, any tick down on that would take a major haircut off of Apple's price. But, again, not thinking that happens until next year. Illumina also came out after the bell, ILMN. And let's get a price on that. Well, do I have it here, Illumina? No, I don't. ILMN. Let's get a current quote. Okay, up $15. Of course, we're probably going to be talking to Amy Smith about this in the next segment. One of the companies that I covered fairly extensively last year, thought it was going to be a great company. Of course, they're in the DNA sequencing business, and it's growing like weeds. And, I missed it. Let me put it that way. It's one of the fish that got away. Anyway, we're going to be back with Amy Smith in the next segment. In the meantime, I would like to talk to you about my newsletter, my daily newsletter, The Path of Least Resistance. If you would like to get a trial of that, right now we're doing a 30 for 30. $30 gives you 30 days. If you want to re-up, we are offering, and you're already a subscriber of mine, you can get probably the best price ever. I think it is the best price ever on getting the subscription extended. So 2 great deals. Go to the front page of TFNN. It's on the banner. Click through, and you certainly can check out my newsletter. In the meantime, we're waiting for Apple earnings. We'll be talking with Amy Smith before then, but I'm expecting this slightly higher on Apple, and we only have a few minutes to wait together until it's out. But Illumina up, CMG down a little bit. Other than that, a quiet day on the Western Front. We'll talk a little bit more about that when we come back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And this is Dave White, sitting in for the one and only Tom O'Brien. And we're going to go right now to one of my favorite ladies that I've never talked to in person, but listened to with bated breath for every Monday when she shows up. Amy Smith, how you doing?
Hey there, Dave. I'm just fine, thank you. That's very kind of you to say that. I love Tom O'Brien's show, and I'm glad that we finally get a chance to meet.
That's certainly true. Well, we don't have much time here. We better get to it. We've got the Super Bowl of earnings coming out here real soon. In fact, we got a couple of them out already. What's your take on the current market right now?
You know what's interesting, Dave? We've seen this heavier volume sell-off, and we're trying to trying to recover here. We had some decent volume a couple days ago on the NASDAQ. As I look at it, the NASDAQ's just above the 200-day. We really, we're still just trying to make sure that we've actually reached a bottom. We had the IBD 50, which is a good proxy for growth stocks. It popped 1.4% on Friday, but, you know, again, that was on some lower volume. But still, it's been nice to see support for, you know, some stocks like Facebook and Regeneron Pharmaceuticals and some of the railway stocks. The airline stocks have also popped back up after the Ebola scare. It was nice to see them recover. We have had some previously reliable marketing bottom gauges that haven't been working as well. Usually when we see the put-call ratio above 1, you know, usually maybe that'll be a firm bottom, but we really don't know yet, and we still have a lot of important earnings this week. We have Apple, which is not out yet. Chipotle came out very interestingly. They beat on earnings. The stock is down just a tiny bit in after-hours trading. Tuesday, we have Coca-Cola. Wednesday, we have Biogen, which is they have treatments for multiple sclerosis. On Thursday, we have Under Armour, the athletic maker. And then Friday, we have Procter & Gamble.
Well, you've got all these stocks going on here. Can I ask you a specific question about one of them?
Sure.
Okay. We've got Illumina out after the bell. Did you have a specific view on that one? I mean, it's up, $18 or so after the bell?
What we can say is they have a genetic analysis, and of course that tends to be, it's a pretty big deal right now in terms of medical field. We're realizing how genetics play into so many things, and of course we have baby boomers that are aging. So it's funny, I've run through my screens. All of these medical stocks are actually looking fairly strong, particularly these big companies. This is a large company. So I would say that, the stock looks good. It's formed a decent base here. And the fact that it's popping higher just shows it's doing what a lot of the other medical stocks are doing.
Now, what else are you really concentrating on for stocks out here?
Well, we have drug maker. There's several of them. We have Acorn. The ticker symbol is there is AKRX. And this one's really setting up nicely. It had a nice move today. It's been tighter. We see there's accumulation into it. I mean, there's professional buying going into it. It is a pharmaceutical company that deals with ophthalmology. They had big earnings last quarter. Their earnings are up 79%. Their sales were up 96%. They are due to report November the 3rd. And then we have this one is another medical stock called Lanet. It's the ticker symbol is LCI. They have genetic drugs for migraines, epilepsy, the thyroid. So, again, another important drug maker. This one's setting up nicely. It does have great fundamentals. For 3 years now, their growth rate, their earnings per share rate, is up 114%. Those are just huge numbers. So I would say right now a lot of folks should keep their eye on the medical sector. Now,
you said that a great deal of the stocks probably had some damage done to them last week.
Sure.
Technically, how does IBD look at when that damage is going to be repaired? And are you saying go long now? I know you always have a kind of a bullish, bearish bias on whether we should be buying or not. Where are we sitting right now with IBD?
Well, we're waiting. We can see if we get what we call a follow-through day. So on day 4, after we hit a bottom, we start counting 1, 2, 3, 4. On the 4th day or later, which could have happened today or could happen tomorrow, if we see one of the indexes advance, usually about 1.25% on heavier volume than the previous day, then we kind of consider, we hit the bottom and, we're in a new uptrend. Until we kind of get that confirmation, I think investors should I would tiptoe into it and be a little careful in the current environment. You just don't know if we're going to get more volatility or if we are going to settle down here and take off again.
So how is IBD looking at Apple since we've got earnings in, 4 minutes coming out?
Exactly. Apple's coming out right now. I have to tell you, there's nothing wrong with Apple. Apple's setting up in a flat base. It has had, in other words, sort of a price consolidation for the last 4 or 5 weeks. Looking fine. Nothing wrong with it. It certainly has made a recovery. It's had trouble, Dave, getting and staying above 100. That would be the line in the sand that I would say if it can get above that and really, let's see some buying power coming into it, then maybe we can get a little bit more excited about Apple. Unfortunately, they unveiled their new iPad. That didn't really have a great effect on the stock last week. Their iPhone sales have been okay. Again, it hasn't really just caused the stock to go tremendously higher. So I would say I want something really good out of their earnings report before I get super excited on it.
I've thought that Apple really only had one real weakness, and we were talking about it in the last hour. And that is all the big sales now coming out from the carriers.
Right.
That how long will they be able to pay Apple $700 for an iPhone as they go to war? T-Mobile, of course, trying to make themselves the biggest pain in the rear end so someone will buy them out, one of their competitors, basically burning down the house and saying, if you don't save me, then I'm going to burn you all down. So those guys are really now having issues with trying to keep their margins up. is Apple safe, you think, with their margins out there? Is the product so good that no matter what happens, Apple will never blink? They'll continue to get $700 from these carriers?
You know, I don't think we can say that because no one really thought that Samsung or the Androids would take away as much of the market as they have. Now, you still have a lot of, Apple users that are very loyal, but when you think about, I think that just in general, take a look at the demand for their products. How many new people are going to go out and buy a brand new iPad, a brand new Mac, a brand new product, which is what a company needs in order to really sustain. It's one thing to do an upgrade to an iPhone, and that certainly will help with the bottom line. But, the demand for their product overall, how are their sales doing in China? They've looked for growth in China. Will that continue? But the Samsung and the Android is very popular in China also. So, and I think you're going to see more competition from as you said, the phone companies create an issue for Apple. And then the biggest issue that I see with Apple is you have so many funds already into it. You have 4,562 funds that are in Apple. How many more institutional funds are going to go into it? Because that's what causes the price to go higher.
Well, why don't you, in the last 30 seconds here, tell people how they can check out IBD?
You know what? Go to investors.com. It's free. And then you can take a look at, stocks that are moving up on heavy volume or moving down on heavy volume. And that shows you where the institutions are putting their money, at least for today. And you can just check it every day. Some people do it on their lunch break or, when they have a coffee break, and it takes about 2 seconds to just take a look at the website.
Well, always a fountain of information. Amy Smith from IBD, thank you for being with us.
Oh, thank you so much. Have a great week.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. This is Dave White sitting in for the one and only Tom O'Brien. But fear not, we're going to go to a powerhouse at Think or Swim, and that's Paul Gigante. How you doing today, Paul?
Great, thanks. And you?
Fantastic. And I guess with the options being probably the only way you can play this market right now, probably a lot of action on Think or Swim, right?
You're right. We've had some very active last few days, and the market couldn't be better for options trading. You know, I love this stuff. This is what, you know, as a trader, this is what you live for. You want volatility. You want it both ways. And you want a bunch of different news stories coming out, almost staggered. You know, we had the Apple earnings just a few minutes ago that really left had a lot of information coming to the market all at once. It looks like right now, you know, Apple's just trading up a few cents from where it closed when we were expecting, the options were expecting to move close to $4.
Now, I often hear options people, including you, talk about looking for a range on earnings. And basically the options telling us what kind of range we're looking for. When I looked at the options, I didn't see a lot of movement in either Apple or CMG after the bell. CMG may have been down $10 or something like that, or take a look at it real quick. It's off $13. Not a lot of movement in these, and the options were pretty much pointing to not a lot of movement.
No, you know, $4 move over the, or $3.82 or something, I think was what our system was saying over the next few days. It's a pretty healthy move for a $100 stock. So, yeah, I mean, I think the options were given a muted number compared to what we've seen a little bit in the past. But there's been a lot of market volatility outside of it, so that's kind of what absorbs a lot of what would. If you have no volatility in the market outside of the earnings piece, then the straddle or the way that we look at the earnings will look overly large, and when there's a bunch of moving parts outside of it, it really kind of mutes what the earnings can do to it. So it's fun, as an academic exercise, at least the way I look at it, to try to separate those two pieces out.
Well, I kind of look at it as thinking that if I'm expecting a huge move and the options are not, maybe I can buy those options at the right price.
Sure. And there's no reason why that options market has to be right. And as we're seeing, really in the Apple one, if the early indications of it being up $1 or so from where it closed, that's really giving it, the straddle sellers or the volatility sellers would be the winners. And so if that's the I go back to the trading words, but if that's the bet you want to make, or that's just what you want to put out there, it's probably going to be a winner tomorrow morning.
Another thing I've been talking about on my show has been the probably a slight change in the way the VIX is acting these days. They changed the way it was calculated. Do you have any opinions on that or thoughts?
I do. I have, but I don't know if mine are completely based in fact, other than just observation. I know that it becomes a little more sensitive to the moves since it's now priced off of each weekly versus the larger strips, or larger, greater distance between the times. So I think it's more precise, which I think is a great change. It's always nice to see them improve these products.
So you're going to be doing the show tomorrow. What are you going to be talking about?
I think I'm going to talk a little bit about what we saw from Apple from today to tomorrow, and hopefully that will give us a little bit of something to talk about. And I'm going to talk about maybe a couple of the other earnings that both came out today. Like I saw the Texas Instruments just released.
Yep.
So those will be the ones, and then we'll try to find a couple stocks that hopefully we'll have a couple listeners call in and give their favorite stocks, and we can dive in and see if we can find something that's worth getting involved with.
Well, it's kind of interesting just in the overall general market to see IBM take such a beating today, and the market end up kind of walk by it. Do you have any idea or any calls on the trend of the market here? Is this just a bounce and a down move?
I'm not sure. I tend to be somewhat of an optimist, and I looked at this down move, and I was a little surprised that it got everyone so sour so quickly. I don't know what that means for the future, but the surprise to me was that it was the souring of the sentiment over really just one retail sales number, if I saw it correctly. We had the other contagion issues of, no pun intended, of the Ebola and a little bit of the Europe not doing so well, but we'll see. I tend to think that things are going to stabilize, and I think the VIX move today really showed that there was some stabilization out there.
Well, I'd sure like it to drop, and maybe some put and call options pricing drop that I could buy them too for the next big move. I've heard you before, and you seem to be kind of a big proponent of the weekly options. When I've been one to trade in the last couple of days of expiration. Is there anything that someone would really expect differently in the weeklies than the monthlies in the last couple of days of expiration?
Well, it's for the people that don't have a lot of patience, I think. And I don't, being an options trader for so long, I don't have much patience. So I love expiration because it kind of gives you your answer right away.
Right.
So what I really think what it does is it gives you a chance. There's a lot of decay in those last couple of days. If you have the trading strategies that try to capture that decay, there's often times that you can really capitalize on that. And it's certainly playing a little bit with sharpened knives, but if you do it smart and try to limit your losses, I think that you can get a lot of action with fewer contracts and some quick information whether you're wrong or right.
Well, that's great. Well, I want to thank you for calling, and everybody look for your show tomorrow on most of TFNN.com. I want to thank you for calling in, Paul.
Thank you. Thanks for having me, and I'm looking forward to it tomorrow.
You bet. And we're going to go back to the market, already in progress, at least for Apple and some of these other stocks out here, earnings tonight. When we look at this, let's get a quote out here, $100.12. Pretty much what I was looking for. Again, in Apple, you're looking for 101.70, 101.75. A close above that will be very interesting. Some people typing in the den. I didn't have time to check it. I'll probably hit it during the break. But fairly bullish comments by the CEO. But I don't think the market doesn't seem to be moving that much if it's still hovering around that $100. I think we've seen a little bit of the street really pushing probably over the last week to hold these stocks up under a lot of stress, and now probably not seeing the other side of that as much as we would if the market was flat. And we'll keep on look on that. Let's check back in with a Chipotle real quick and see what we have there. Chipotle off $15. When we look at that CMG, again, kind of looking at that gap. If there was probably a stock, I'm not very bullish out here, but if there was a stock that I think could run to the end of the year, and I've given my ideas about this before, that is, if they can hold this market up maybe into Thanksgiving, then maybe they can start a short squeeze that will last into the end of the year, and we'll see the huge crack after the first of the year. We've gotten a warning. And I've told people probably on my show, 3 weeks ago or 2 weeks ago, as the stock market was bouncing, it was a gift. I suspect that this is a gift for the bulls, for them to get back out on the easy side. And that may be something too hard to do, especially if this market lulls us to sleep right back in to the end of the year. And Chipotle might be one of these good stocks to take a look at. Not a lot of movement down. And again, I said, if the market really turned around, this thing got back to about 615, 620, we could see volume kind of cut out toward the end of the year and see a nice move back up. And of course, we've got a high out here at 967. Without a lot of volume, but maybe it could still get tested out there and maybe make a double top. That may be the top of this high flyer. Not many of them left out there. Anyway, I want you to give me a call in the last segment at 877-927-6648. Also, go to the front page of TFNN and check out a wonderful deal on my daily newsletter. We've been coming off with some monster wins over the last 3 or 4 weeks, and we want to pass a little bit of that around, a little bit of the old Dave goodness. You can do that for $30 for 30 days. You also, if you're a subscriber of mine already, we have a wonderful deal for you to continue subscribing. So go to the front page of TFNN and check it out right now. We'll catch you on the other side of the break.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien. And this is Dave White sitting in for the one and only Tom O'Brien. And going into the home stretch here, just a few minutes left. Certainly, we've looked at Apple. Apparently, a lot of very bullish comments by the CEO are met with a big yawn from the market so far. So we're going to have to look a little bit further into seeing what this market's going to do. We're going to be able to do that in the morning. First with ARMS Holdings, ARMH, of course. They do the processors. Probably going to get a better view, long-term view about what Apple's doing from them. We also have Hog, if you're riding a big hog. Of course, everybody down here for Bike Week a big deal out here in Florida over the next 2 weeks. A nice little bounce off the lows out here. So we're going to be very interesting to see what Harley-Davidson is doing. Again, if you've listened to me lately, I think that interest rates on cars and some of these things that have been rather low are probably going to be the first to go up. So I'm watching Harley-Davidson very closely to see what they say in the morning. We also have a Coca-Cola. We have McDonald's. We've got just a ton of stocks coming out. Let's take a look at MCD real quick and see if there's anything in this one to see. I mean, this thing's been so far down and had some decent volume even just a few days ago. But it hit its gap. You know, probably not a bad deal. But now with gas maybe down a little bit lower, looks like pressure on McDonald's still is continuing. Let's take a look at another one if we have time. We looked at Hogs. We looked at CMG. Coca-Cola. Let's take a quick look at Coke and see if there's anything there. A lot of these stocks have been so kind of washed out over the last few trading days, not a big deal. Now, Coke is in big danger. The reason for that is it broke through its recent highs of May 16th, 2013, which was a long-standing high at $43.43. But it is back down inside that range. It went back up. It really never had that volume. This is one that could be very telling tomorrow. If they come in with something that the street does not like, they certainly look, as a percentage basis, like that they could head down to this gap that's about $40.50 in a heartbeat. That would be the, what is that, July 15th gap up. It only had about 23 million shares that day, so not a big day. And, you know, we're pretty much doing that. So if I had to bet, but I wouldn't, looks like Coca-Cola has weakness down to about $40.50. And if you were actually thinking about buying that one, we certainly would be taking a look at that. Other things, let's see anything else out here that before we go away for the evening. We've got plenty. What's that? We looked at Hog. I want to look at a couple other stocks that are coming out with earnings any day now. GoPro, of course, it came off. Now, it really didn't have much of a recovery when we look at GoPro, and certainly volume is very light. Earnings, I think, on Wednesday for GoPro. What is going to be going on with this one? I think you had a classic double top. It came in with lighter volume. You don't have much of a history because of the recent IPO. And no way to actively short it, and the puts are sky high. May not be a decent play out here, but certainly if there's a stock that could come back to about $50 and take a 50% haircut, it certainly looks like GoPro. We've seen, of course, the action in Netflix and FLX on some of these that didn't live up to the hype. Really sideways action, of course, in Netflix today after that high volume high. You've got to look at Netflix, most likely headed back down to this $312 low from April 15th. So some of these stocks that are wounded are probably going to continue bleeding a little bit more before they really start moving much. Verizon in the morning, we had a little discussion in the den here. And the question is, what's happening with the carriers? And I think that they are under assault, and pretty much under assault from T-Mobile. It is going to be problematic. I know some friends of mine who have 3 kids and 5 phones in the family are paying, or were paying, somewhere close to almost $300 a month. They moved to Sprint. Sprint was making a deal for $99. I think with taxes, they now dropped that to $120. But with T-Mobile putting pressure on these folks, what is going to happen with Apple? Is that going to eventually crack where Verizon, AT&T, and the rest of them are going to say, hey, we're charging less for our product. We can't make the money back on selling your Apple product at $299 for the latest iPhone. What are we going to do? We're probably going to have to pay you less or charge more for the phone. And there's going to be a point where one of these companies is going to break ranks, and that is probably going to be the point that Apple has to play a little hardball. And the question is whether or not those other carriers are going to say at the same time, we just can't make it as long as T-Mobile's out here undercutting our profits. But earnings in the morning, and that's what I'm going to be looking for them in their conference call. Any hint, probably not a big play in Verizon, but any hint out here that they are looking at maybe trying to either raise prices or cut the cost from Apple on their particular brand of phones. Lumina came out after the bell, and of course it's rocking up. Let's see if we can't get a quick quote on that. Of course, the sequencer of DNA up $17. You've got, basically this is going right up to their high, so I'm going to be watching this very closely tomorrow too. You just need about 2.5 million shares going through 185, and you pretty much have higher prices in this. And, 1.7 million shares today, not bad. But this is going to open probably in the morning right at those highs. The March 4th high had 2.5 million shares. The July 24th high, 2.8 million shares. So that's the number you're looking for. We could get a huge breakout in Illumina, and I like the sector out there, at least in the coming years. DNA sequencing is big. So take a look at that. Also, go to the front page of TFNN.com if you'd like to check out my newsletter, The Path of Least Resistance. There's never been a better time and a cheaper price to get a taste of my newsletter, 30 days for $30. Just go and check that out. Tom O'Brien will be back tomorrow. I know you're probably jonesing for a little of that Tom goodness. Well, you'll have to wait till tomorrow. And we'll see you then. I have my show at 2 o'clock tomorrow, so check that out also. You all have a great and wonderful night. Catch you tomorrow.